business cannot run when it has liquidity issue. But because what that means that you cannot meet your day-to-day obligation. And when you can't meet your day-to-day obligation, it means that you have gone insolvent. And by the fact that you have gone insolvent, it means that you have to close the business down. Now, government is saying that to run my day-to-day obligation, I know that you are still going to pay your tax at the end of the year. But please, pay me a portion of it right now. Now, on that supply of the pomo that I have sold to pastor, for instance, for 50,000 naira, pastor is required to deduct 2% for the supply of the pomo. 2% of 50,000 is what? 10% of it is 5,000. That's 500 naira. Abi? No, that's 1,000 naira. 1,000 naira. So, is it 30,000? 1,000. 1,000 naira. So, pastor, when sending money to me, pastor will send 49,000 to me and go and remit that 1,000 to the government on my behalf using my TIN, my tax identification number. It is compulsory. It is compulsory. However, the Withholding Tax Regulation 2024 says that if you are a small company, right, and then you don't have an obligation to deduct. Do you understand? Because you are a small company. However, when you make a transaction that is 2 million and above, you have to fulfill your obligation when it comes to withholding tax. Right? Now, let's go back. Pastor has deducted 1,000 and remitted using my TIN. At the end of the year, let's say the tax I am paying is 30% of that 15,000 profit that I made. 30% of 15,000 is what? That's 5,000. Now, don't forget, pastor has remitted 1,000 naira already on my behalf. What you will do is that because a credit has been issued, right, you will deduct at the point of filing. That credit will already be there because that credit has been credited to my account because of the thing that I have supplied. Now, that 15,000 will be removed from 1,000 naira, and then what you will have to pay will be 14,000. Now, you now see that the problem we now have is that for people doing business is that even for personal, it's a sixth for personal income tax too, right? If, let's use the same scenario, personal income tax, I'm supposed to pay, let's say 3,000 naira as my tax for personal income tax. There's already a withholding tax credit that has been credited to my account using my pay ID. If it is there, now it means that I can use it to offset my liability. But the problem is that most of us, we are not registered for tax purposes. We are not registered with our state internal revenue service, or we are not registered with FIRS. And what that means that this person did not deduct on my behalf. In some situation, the person could even have deducted from your behalf, but you will not be able to track it or use it to offset your liability. Do we understand? Which is why we need to be cautious. Now, capital gain tax is saying that when you have a chargeable gain, you have disposed of an asset. I sold this and I made a gain on it, right? Instead of being taxing it on 30%, I will tax it at 10% because it is a gain on an asset. Do we understand? It is a gain on an asset. If I buy shares and I sell off the share to the extent that the proceed of that disposal is more than 100 million naira right now, the law says that 100 million, right? That the law is saying that there will be what? I should what? Compute the CGT. But if it's less than 100 million, the law is saying that go scot-free. Now, because we will not be looking at the aspect of what change or the changes to the new tax law, this section is just for how do you minimize your tax. I'll just say it. From next year, what government has done from this new tax act is that it has increased that allowance from 100 million to 150 million. Do we understand? To 150 million. And in a situation where I have sold off my shares in Dangote and I use it to buy another share, even if it is 1 billion that I have made, it will not be liable to tax. That is what the law is saying, which is what exists now. Okay. Now, value added tax. Value added tax is a tax on what? Supply of goods and services. Now, let's go back to the scenario of Pomo. Let's go back to the scenario of Pomo. I have supplied Pastor Abi 50,000 Pomo. The law is saying that whenever I make a supply or I perform a service, right? Because a supply has been made, that what I should do is that I should charge, when issuing an invoice to pastor, I must charge a value-added tax of 7.5% on that Pomo, provided that Pomo is liable to VAT. But in this case, we can say Pomo is not liable because it is a basic food item. Do we understand? But in a situation where it is not, and it is liable to VAT, what I will do is that I will charge VAT on that supply. Now, pastor will pay me 50,000 plus the 7.5% to me, and I will go and remit that 7.5%. So what pastor will do is that pastor will pay me 49,000 plus 7.5% on that Pomo, Abi, hypothetically, and then withhold 1,000. You remember the withholding tax. We remember, right? Now, that is what VAT is. Now, the spoiler is that from next year, the law is saying that in a situation when you are liable, when a transaction is liable to VAT, and then you don't pay VAT on that transaction would not be deductible to you. Now, what it means is that, you know that what I have done is that what I bought from Chivadewusi was 30,000 Abi. No, 30,000 Pomo. Right? Now, let's not say that transaction is liable to VAT. Right? And it's a cost to me, right? Which I'm supposed to use to offset my income to get the profit. Now, in a situation, if that transaction is liable to VAT, and I do not pay VAT when I was paying Chivadewusi, what government will say is that 30,000 doesn't exist. It means that your profit for that year will be what? 50,000 naira. Instead of what? Do we understand? Do we understand? So, now from there we'll go into what are the ways in which, as SMEs, you can minimize your tax liability. The first thing is to have what? Have a structure. What did I say? You have to have a structure. You know, enough of those times when we just run the business as you like. I'm just running a business. Have a structure. What are we trying to say? You look at it, my business. What is my what? Strategic imperatives. If I'm running a business now, and I foresee that I want to scale up that business from whatever it is now, I'm probably maybe I'm selling 50,000 now, but I know that I'm going to expand. I'm looking at expansion of 50 million, 100 million, 1 billion. That would determine how I'm going to structure my business. Now, before we go there, I know that we have been hearing that, those of us on Facebook and on WhatsApp. No, WhatsApp doesn't, maybe it's broadcast that WhatsApp does. It doesn't, on X, yes. Thank you, sir. You have seen some people putting on their ring lights.